Hello everyone, and welcome to the Quantpedia Explains Trading Strategies video series. Today, we will speak about the market sentiment and an overnight anomaly.
Hello everyone, my name is Radovan Vojtko and I'm CEO of Quantpedia. In this video I will show you how to combine market sentiment and other trading strategies, how the market sentiment or information about the market sentiment can help us to improve other trading strategies. We will start with Overnight Anomaly. You may remember the previous videos we spoke about Overnight Anomaly and how the performance during the night is much higher than performance during the day. It works especially well on US equities. Then we build a strategy on top of that, but instead of using US equities, we spoke about Bitcoin and alternative cryptocurrencies. And we showed that this seasonality effect, it works also in cryptocurrencies and it works very well. There is an overnight period in cryptocurrencies when the performance is especially positive, and you can have a nice strategy built on top of that. Can we improve these overnight trading strategies? The answer is yeah, we can. We can use the market sentiment and we can improve these overnight trading strategies, but that's not the only strategy that we can improve. The market sentiment filters are very strong and it can help us to improve, nearly any trading strategy. In this case, we are not using the cryptocurrencies, so we will show how to improve the overnight anomaly on US equities or US stocks. We analyze three different indicators which we use as a proxy for market sentiment. The first one is we analyze Brain market sentiment indicator, which is the indicator based on alternative data set, which combines different news sources into one indicator. Then we use the VIX index, which is the volatility index, sometimes called the fear index, well known. And then we use the short-term trend as a SPI ETF. Trend following filter can be used also as a market sentiment indicator. There are a lot of research papers about the market sentiment, about the overnight anomaly. I will not speak about them, but here we again see that there is a strong difference between the intraday performance of the SPI ETF, which is the proxy for US equities, so that gray line, and the overnight, the performance, the blue one. 3 years, we can see that the daily performance was highly positive during the overnight period and negative during the intraday period. So the overnight anomaly is still present in US equities. How we can measure the market sentiment? We can have a traditional sentiment indicator like CBOE volatility index. The CBOE volatility index implied volatility out of the options. The high VIX index means the option prices are very high, so that it means there is a fear in the market of the near crash. High numbers in the VIX index means that the mood in the market or sentiment in the market is a bad one, and the low VIX index means that sentiment is a good one. Then we have the Brain market sentiment indicator, gives a score on the market's mood by analyzing thousands of news from financial media using the natural language processing technology. Indicator weight depends between 0 and 100. The higher percentage of the positive topics, the lower number, the lower percentage of the positive topics. The higher number is the better. And then we use the trend. Here in our case, or in this case, we combine the overnight anomaly with the three different market sentiment indicators. So in the first gray line shows us what is the performance of the original overnight strategy. So when we go long during the overnight session and when we hold no equities during the intraday session. We use no market sentiment overlay and we see that we have multiple drawdowns, one big one at the beginning of the 2020 during the COVID crisis, and few smaller ones. Now, if you use three sentiment indicators overlay, the first one is that we invest into the overnight anomaly only when the SPI is over its 20-day moving average, is the red line. We have a higher performance without the high drawdowns. The second possibility is that we will invest into the overnight anomaly only when the VIX, the volatility index, is under its 20-day moving average. And the third one is that we invest into the overnight anomaly only when the BMS, the Brain market sentiment indicator based on the news, is over its 20-day moving average. So we see that all three market sentiment indexes improved our original overnight anomaly. Here we have a table. The Sharpe ratio is 0.84 in case we use no signal, and in case we use the SPI signal, we have 1.92 Sharpe ratio. In case we use the VIX, we have Sharpe ratio 1.80, In case we use BMS signal, we have Sharpe ratio 1.71. We see that all of the three signals improve the original overnight anomaly. We can combine all of three strategies together because the average correlation is just below 0.6. So it means that every sentiment indicator, it can probably capture the embedded information. It's often the case, so it makes sense to use multiple sentiment indicators and to mix them together because not all of them capture the same information. So we can improve when we diversify between multiple sentiment indicators. Now here we have the resultant strategy. We can change the calculation period from 20 days until to 10 days or to 50 days. The resultant performance is still interesting. So the Sharpe ratio is over 2. We have 3-year cumulative return 15% per annum with a really small volatility. Thank you for watching this video. I hope that I showed you how you can use the market sentiment indicators to improve one trading strategy. You can use similar methodologies to improve nearly any trading strategy. It really makes sense to pay attention what is the market sentiment, because there are some strategies that perform well in positive market sentiments, but take care that there are some strategies that perform well with negative market sentiment. It makes sense to use the market sentiment indicators as an overlay of your trading strategy. Thank you very much for your attention.
Interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.